What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. We have a lot of things to go over. We had a crazy day in the market today. Tesla is down over 21%. It looks like the tech bubble is finally bursting at least a little bit. I mean, the NASDAQ took a beating. All these tech stocks took a beating. Apple, Microsoft, Google, Amazon, Tesla, especially Tesla. They're down 21%. Just today. They were at $500 last week. Right now they're at $330. So overall, we have a lot to go over in this episode. We have about a $10 million options trade that we're going to be covering at the end of this video, and it does have to do with the tech sector. So make sure you stick around to the end of the video to see that. But we're also going to be going over some important news with the market overall and Nikola. So overall, we have a lot of good things to cover in this video. If you guys are new here, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. But let's get right into it. So, Tom, what major news happened in the stock market today?
Yeah, the biggest news today was really just that all these stocks are just continuing their downtrend. And to start off the week, CNBC goes ahead and they're reporting that shares were really under pressure, and it's the worst sell-off in more than 5 months with a lot of these tech stocks. And the NASDAQ dropped 3.9%, Dow Jones dropped 650 points or 2%, the S&P 500 even fell 2.7%, and that's just crazy to see. I mean, just look at the stair step down here. I mean, these are from some pretty volatile swings, guys. I mean, you don't see swings like this all the time. The last time the market was really swinging like this was back whenever, we really had the beginning of the coronavirus crash. We can see that obviously this drop down up here is very steep, almost identical to the beginning of the coronavirus crash. And I'm not saying that, stocks are going to crash, all the way back down to $2,200, at least on the S&P, or stocks aren't going to fall another 50%. But I'm saying that a lot of these stocks have just really went too far past their high, and it's just they're due to come down based on how much they've really exploded. And a lot of this was really the Fed pumping up the market, I believe. I mean, obviously there's a lot of consumer money coming into the market also, but the Fed had a lot to do with this, and they kind of actually created this small tech bubble.
Well, yeah, I mean, it was the Fed definitely had an important role, but a lot of it was also just kind of like how bubbles work. Tesla and Apple, those two announced that they had the splits coming, and they ran up on that. But just tech stocks across the board really exploded. And part of it, like you said, is due to the Feds, but another part is just due to how the market works. We were just in that in a bubble phase, and people saw no end to it. People wouldn't think it's even possible to see Tesla down 21% in one day, or the NASDAQ down 5% today. That was just not possible in a lot of people's minds. It was just all they saw is the NASDAQ going higher and higher and higher every single day. But eventually the bubble was just bound to burst, and that's what we're seeing right now. So overall, there's no way to tell whether this will be the bottom and we're just going to see an explosion back up, or whether this is just the beginning of a larger downfall. There's really no way to tell right now. But I think this week will be pretty influential. If we keep seeing the market keep bleeding, I think that might signal a stronger, or I should say a longer downturn. But if we see some consolidation and maybe even a bounce back up, I think that'll give us a different story. What do you think?
Yeah, I mean, I totally see the same thing, but really, my main thing is I almost wish that this would happen, because, I really want to get some shares of Apple really low and some shares of Tesla. I'd love to get Tesla at a 50% discount right now. I mean, that'd be great. So really, I mean, I'm waiting for these stocks to come down, and then, I'm going to be purchasing shares whenever they do. So yeah, I mean, I definitely think that they could definitely trigger a larger sell-off if we see, more momentum to the downside, especially, on the big indexes like the QQQ, which is the NASDAQ. I mean, that's been the main killer here. And really that one got so far overextended that, I mean, it could fall we could fall back another 12% before we even hit the high that we were at before the virus happened. And if we go all the way to lows, we're talking another 38% on the index itself. And we're talking stocks like Apple and Tesla and stuff like that might be down 50% plus from their highs. And, that's honestly creating good opportunities for a lot of traders. So for a lot of guys right now, I mean, don't be too worried if this stuff happens, because like Mike said, this is just what the market does. And whenever these bubbles get big like this, they do burst. But just keep in mind that whenever they burst, you can buy a lot of stocks, pretty cheap then. Like whenever the coronavirus happened, I know a lot of people were picking up shares of Apple, shares of pretty much every stock. And then, they all pretty much skyrocketed back up. And I mean, at least if they didn't skyrocket, they at least pop back up at least 30%.
Yeah, for sure. There's always opportunity no matter what happens. So even though that the markets are taking a pretty big beating right now, there's still opportunity with this. So if we see the market fall more, it'll just give long-term investors a better buying point. So what other news happened today?
Yeah, Nikola Motors announced a partnership with GM today, and that's a pretty big deal that they had with this contract. You can see that NKLA shares ended up popping 40% today. If you count the pre-market movement on this stock, and General Motors itself, which is a pretty big stock, popped about 8%. And those two stocks making a deal together are pretty good. And if we go ahead and read kind of what's in this contract here, General Motors is going to receive a $2 billion equity stake in Nikola Motors for a certain in-kind contribution. And General Motors is going to engineer, validate, and build pretty much the Nikola Badger for both battery electric vehicle and the fuel cell electric vehicle variants as part of their services. So pretty much, I mean, it's going to be that Nikola is exchanging a lot of their powertrain knowledge and their research and development, and they're giving that to General Motors for pretty much the ability to be able to produce and actually, have a factory already going. And, they'd be, obviously, if they partner with General Motors, they're going to be able to produce a lot more vehicles than they could if they had to, manufacture their own factory from the ground up. So this is definitely going to help both companies, I think, in the long term. And really, it's going to help General Motors out a lot, because they're going to be supplying fuel cells to Nikola for a long time, and that's in the contract as well. And this contract is worth well into the billions and upon billions dollar ranges, especially if you count the profits going down over the next 10 years.
Yeah, for sure. I think that's totally a win-win for both companies. And I think that's why we saw both Nikola and General Motors pop. General Motors is actually doing pretty good lately. I know they had a rough couple of years, but from the lows back in March, they're doing pretty good. And then NKLA is, they're not quite at their highs. I remember when they remember that one day, Tom, they went from like $40 to like $100 in like 2 days, and everyone was going crazy, and the options were like crazy expensive because the IV was at like 250%. That was crazy. But overall, they're not at those levels right now. But I think this contract can be great for the long term for both companies.
Yeah, and it looks like they really gapped up today on Nikola. I mean, I know that high is all the way up there at around $100, but I mean, I honestly would not be surprised if Nikola kept running tomorrow, because I mean, just out of any company that they could get a deal with, they got a deal with GM. And I mean, that's just a pretty big company, and they have a lot of cars in the world, and they obviously can, export globally too.
Yeah, they've been doing it for quite a while. So overall, good news for both companies. And now for today's Discord member of the day. So huge shout out to Freshy Green for always sharing great information and helping out other members of the Discord community. So shout out to you. Thank you for thank you for being very positive and helping out other members. So now for the momentum plays for tomorrow. And the first one is Tesla. So Tesla got killed today, and it's closing near its lows, and it's actually just kind of consolidating right now in after hours. So what levels should we be watching for Tesla tomorrow?
Yeah, I'd really watch for them to break the 328 level in pre-market tomorrow.
So if it breaks below that, we'll be watching Tesla to the downside. With the next play, we're looking at NKLA potentially to the upside.
Yeah, if they break this double top at around 54.56, I think NKLA could definitely run tomorrow with that news.
Yep, and that one is to the upside. And then last but not least, we have KHC, and this one is to the downside.
Yeah, watch for them to fall below 31.64.
All right, yep, again to the downside. And now for the $10.8 million options trade for this week, we're looking at the Apple 110 strike put options that expire this Friday, September 11th. So Overall, there was about, like I said, a little over $10 million put into this play. We're looking at the 110 strike puts. I mean, I think this is pretty hard to say because right now, I mean, you would think that the market would, bounce back a little bit or consolidate a little bit, at least in the short term after the huge fall we saw at the end of last week and, today. But I don't know. I think this play can go either way. The main question is the person behind this trade, are they longing these options or are they shorting them? If they're longing them, they would want Apple below $110 by Friday. If they're shorting them, they would want it above $110. We know that they're trading the put options, and we know that they're trading the 110 strike that expire this Friday. We just don't know if they're longing them or shorting them. So I think it's really hard to tell. I mean, what do you think about this? I'm pretty neutral.
Yeah, I mean, Apple actually announced an event that they're going to be having on September 15th today, and that's why they kind of popped up this morning, contrary to what the market did. But I mean, other than that event, I mean, man, I would think that they would have to be honestly longing these puts. I mean, I know a lot of people think Apple might pop back up based on this news, but I mean, I think it's more of an overall market play here. If the overall market or if the overall NASDAQ goes down, as in QQQ and Tesla per se, I could definitely then see Apple also coming down with it. But with it being $10 million, it's just one of those, another head scratcher like we were talking about yesterday, where you just don't know it because it's just so much money going into it that your mind wants to say that they shorted them. But at the same time, based off of what's going on, you'd have to say they longed them, though.
Yeah, I'm going to take the opposite approach of you, and I'm going to say that they shorted them. And here's my reasoning. I think that they would short the 110 strike put options as it is not necessarily a trade, but more of a potential long-term investment. I think they're shorting these 110 strike put options, and even if Apple does go below $110, they'll just take the assigned shares and hold it for the long term. You know what I mean? So I'm not saying that they're shorting them for a trade, but more of a potential long-term investment. Because if Apple is below $110, all they have to do is buy a ton of shares of Apple. And if they have no problem with holding that for the long term, they're actually getting a great entry price. So
yeah, that makes a lot of sense, especially with that new iPhone coming out. I mean, if the stock does go up, then they might have shares at 110 and be in, at a very solid price. That makes a lot of sense.
Yeah, for sure. So we will definitely see by Friday. So now for the comments from the previous episode. And with the first comment we have goes saying, can you look at INTC? They just released their Tiger Lake chip, but apparently have been mentioning AMD a lot in their announcements, maybe signaling they took a bigger hit than they're showing. All right. So Tom, you know a lot more about those chips than I do. So I'll let you cover this.
Yeah, I mean, I think Intel could definitely fall back down. I mean, they lost some contracts with Apple that led to them having terrible earnings, and then they just had some bad news where they had to delay their chips. But their chip did just come out, and they ran on news of the chip coming out and of the specs of the certain chip. But the thing is that over the past few days, no matter what happened with the news, they still ended up tanking with the tech sector, and that's kind of expected whenever you see the big stocks like QQQ and Tesla and Apple all falling. I mean, it's obvious then that Intel is probably going to fall too. I don't think that there was a lot of stocks that were green over the past 3 days. I think pretty much across the board, on my watch list anyways, there's been almost all green stocks unless we're talking about gold or SPCE or something like that.
You mean
But
red stocks, Tom?
yeah, red stocks. Sorry. Yeah, most of them were all red over the past 3 days. There's almost been no green stocks on my watch list over here. And I cycled through a few different watch lists, and it's been kind of crazy to see the past 3 days. The only stock that's actually been green was which was Dominion Energy, or the ticker symbol D. But going back to Intel, I think that they could definitely be have more downtrend potential over the next couple of days. They haven't had too good of news lately, and really, I'm holding them for the long term, and I'm averaged in at $47.99. So just keep in mind that this stock, they've had some bad fundamental news come out about losing certain contracts, and obviously they have a lot of competition with AMD and a couple of other companies. So for the long term, though, I think Intel will be good, but over the next few days, I could definitely see them continuing to go down.
For sure. Like you said, a lot of it depends on the overall market too. So we have Tasha saying, what price would you buy back into Tesla? So personally, I would just dollar cost average, like maybe like buy a share a week or a share a month or whatever fits your budget and just do it over time, because no one can catch the top and no one can catch the bottom. Not even Warren Buffett, who's been trading the markets for 70 years and who's worth, $80 billion. So personally, I would just buy in, one share a week or one share a month or whatever time frame you want. I think that would be the best way to go. But like, what levels can you see? Like, what levels are you seeing right now on Tesla, Tom? Maybe to help her out.
Yeah, I think for a long-term outlook, I mean, honestly, the shares right now are at a pretty big discount, 30% from the highs. This was honestly my first level to watch was around $350, and we honestly passed that today. But my next level to watch would be around $275. I think that if we hit that, that'd be a pretty solid support on Tesla. And then if we go below that, I think that we could even hit, $200 a share. But as far as the lows go, I don't think that Tesla will go lower than 200 a share, though.
Yeah, and then guys, I just want to remind everyone that if you guys are looking to pick up some long-term positions, you can always do what's called a cash secured put. And pretty much what you're doing is, I'm going to give an example right now. Let's say we look at Apple and you're saying, you know what? I like Apple's price right now. It's at $112, but I would like to get it at $100, right? What you can do is you can go to the options chain and you can go to, like, let's say the October 16th expiration. This is just a random expiration. You can do whatever expiration you want, but you can sell the 100 strike put, right? Now, if Apple is below $100 by expiration, you're going to have to buy 100 shares of Apple for $100 each, right? If it's not below 100, like let's say it's like 100 to 1, let's say it's 101, or let's say it's 120. If it's above 100, then you're just going to keep the premium that you got for selling the put. So for example, right now on the 100 strike put, the premium is about $300. So if you sell that, you're going to get $300. As long as Apple is above $100 by expiration, you're going to keep that $300. If Apple's below $100 by expiration, you just have to buy 100 shares of Apple for $100 each. So it's kind of a win-win when you think about it. The worst case scenario is, Apple's at like $90, but you still have 100 shares of Apple at $100 each. And if you're okay with that price and you want to hold for the long term, really you're not losing. And if Apple's above 100, you just keep your $300 and run. So if you guys got confused by that, look up what's called a cash secured put. It can definitely be a win-win for a lot of people in the market right now.
Yeah, so that's probably the smartest way to go about getting shares right now, honestly.
Yeah, I mean, really, because the worst case scenarios, the stocks just blow past your strike price. But if you're planning on holding for the long term, it doesn't matter. And in, let's say, Apple or these stocks just explode up, then you just keep your premium and run. So I think it's a total win-win right now. So with that being said, Tom, do you have any last-minute stocks, options, or anything to watch out for in the market for this week?
Yeah, I think just about everybody knows what I'm going to say today. SPCE, of course. The market is terribly red today, and SPCE moves up about 9.3%, which was just awesome to see. They had a pretty good past 2 days, especially compared to the overall market. And this was due to them actually having news come out over the weekend where they're going to pretty much Richard Branson, who's one of the founders of this company, they're going to be like doing a test flight pretty soon. I believe it's in October. So they ended up flying up on that news, but they honestly have a pretty good setup compared to the overall market right now. And especially in the long term. I mean, for the long term, they're down from their highs, pretty far. I mean, let's see, their high, we're down about, I'd say around 58-60% right now. So that's pretty big, a pretty big upside potential on this. And really, if we break highs of around 1825 tomorrow or 1828, which was the high of the other day, I could see this stock going pretty much higher, maybe back up to like $19 a share. And you could get a pretty good quick day trade out of that.
For sure. Thank you for sharing that. And thank you guys so much for watching this video to the end. Thank you guys so much for all the comments, likes, and new subscribers. Tom and I really appreciate all the support. It really helps us out so much by you guys leaving comments down below. So thank you guys so much for all the comments, the likes, and the new subscribers. We're so grateful for you guys, so thank you guys so much for that. If you guys have any questions, let us know in the comments down below. Other than that, thanks for watching.